Ladies and gentlemen, holy hell, JPMorgan has officially kicked the cyber hornet's nest. The same institutions that financed corruption, rigged markets, engineered bailouts, and protected Jeffrey Epstein for 2 decades now want you to believe that Bitcoin is the threat to financial stability. And today I'm going to show you the receipts, the timeline, the smoking gun, a coordinated attack on MicroStrategy, on Saylor, and on Bitcoin itself. This isn't FUD, this isn't speculation. This was an economic hit job, engineered in boardrooms, timed to perfection, and executed while retail panic sold into the dirt. And tonight, we expose the whole thing. You calmed down the thunder, Jamie. Now get ready for the boom, son.
A new social media post here from the President of the United States. He is calling for a Department of Justice investigation into JPMorgan, former President Bill Clinton, and others involved in relationships with Jeffrey Epstein. Here's what the President said on social media just a short time ago. He says, now that the Democrats are using the Epstein hoax involving Democrats, not Republicans, to try and deflect from their disastrous shutdown and all their other failures, I will be asking Attorney General Pam Bondi and the Department of Justice, together with our great patriots at the FBI, to investigate Jeffrey Epstein's involvement and relationship with Bill Clinton, Larry Summers, Reid Hoffman, JPMorgan Chase, and many other people and institutions to determine what was going on with them and him. He goes on to say records show that these men and many others spent large portions of their life with Epstein and on his island. Stay tuned. So this presents a significant challenge for those individuals and institutions that the president is suggesting he is going to turn the Department of Justice onto. Clearly, there's a history with a number of these individuals and institutions with Jeffrey Epstein. The potential for embarrassing headlines is certainly there for all of them. And it represents a political response here from the President of the United States, who has been under fire for several days now from new emails released on Capitol Hill that show Jeffrey Epstein in emails years before his death discussing his deep and ongoing relationship with Donald Trump that was active for several decades and ended abruptly around 2004. All of that pressure from the Epstein scandal on the president and this White House now appearing to result in a social media post in which the president is demanding that his Department of Justice investigate others for their relationships with Jeffrey Epstein. So we'll see what the White House has to say about this. Any additional detail from the Department of Justice on where this investigation might go.
All right, now before we go any deeper into Epstein, Jamie Dimon, or Operation Chokepoint 3.0, you need to see the timeline, because once you see it, you'll understand why this was never organic. This was scripted. May 14th, Jim Chanos goes on camera, long Bitcoin, short MicroStrategy, and that was a blatant attempt to sway sentiment, a little bit of a signal flare. July 7th, JPMorgan hikes margin on MicroStrategy from 50% to 95%. Let me translate that. Hey traders, we're forcing you to sell. This is Liquidity Engineering 101, a choke point designed to push MicroStrategy into weakness. September, Metaplanet announces a capital raise. MSCI panics. Why? I don't know, maybe because the Saylor playbook was spreading globally. And then the smoking gun. MSCI freezes Metaplanet from the index. In their own words, to avoid potential reverse turnover. Translation, we can't let any more companies put Bitcoin on their balance sheet. It threatens the legacy system. October 10th, boom, at 8:34 p.m., MSCI slips out a consultation extension. And only minutes later, Trump drops the tariff announcement that triggers the global flash crash. They buried the announcement under macro panic. That's not a coincidence. November 20th, the ambush. JPMorgan dredges up the 42-day-old MSCI note, and suddenly journalists start screaming. MSTR MicroStrategy delisting risk. Billions could flow out. That was not news. That was a coordinated delayed release weaponized narrative deployed into peak fear. Tell me again it wasn't coordinated. Tell me again this wasn't strategic. Tell me again JPMorgan didn't plan this economic hit job.
All right, so some of the comments online, people are talking about some of the previous videos and the timing on JPMorgan, okay, and when they actually increased the margin requirement on MSTR. So let's look at that, right? So I have an email here from JPMorgan on July 7th, okay, that is when they did a firm-wide increase in the margin requirement for MSTR. Now, let's look at that, right? So we have a chart here, right? And I overlaid the vol on that chart. And let's look at July 7th, this line here, okay? Now, on July 7th, the 90-day vol was going down between June and July. The 60-day vol is going down between June and July and continues to trend down. Stock price is stable, goes up for a bit, but now look, as they put this firm-wide margin requirement increase on MSTR, it goes up, but then it pretty much precipitously goes down, right? People had to liquidate that security. Now, there is no risk model at that time that would have told JPMorgan they should be increasing the margin requirement. This is a coordinated attack.
See that? FTDs spike, transfers freeze, shareholders report delays, and moving their own stock out of JPMorgan. That's not concern, that's not volatility. That's the cabal defending its turf. Now, why is JPMorgan doing this? Well, let me be crystal clear. This isn't about MicroStrategy and this isn't about MSCI. This is about monetary power. There is a war happening behind the scenes. The old system versus the new system. The old guard, JPMorgan, Wall Street, the Fed, the banks that want you enslaved to credit and inflation. And then the new guard, the Treasury, stablecoins, Bitcoin, the White House, a new digital architecture that cuts banks out of money creation. And what sits right in the middle? MicroStrategy, the conversion bridge, the single biggest corporate on-ramp to long-duration Bitcoin ever created. JPMorgan isn't attacking Saylor. They're attacking the bridge to the new system.
Is MicroStrategy down because Bitcoin is down, or is Bitcoin falling in part because the strategies of the world, the Michael Saylors of the world, have to sell the crypto because their equity is going down? What's the chicken? What's the egg?
Yeah. Well, again, because of my world in research and on BitMine, we are really plugged into all the trading desks and all the clients that trade. Anybody who has a sizable Bitcoin long position, okay, let's say it's more than $1 billion, they have very limited ability to hedge it in crypto derivatives, like calls. The max they can do is maybe 5% of their holdings. And then if you go to traditional CME exchanges, their contract sizes prevent someone from hedging $1 billion portfolio. However, someone can use MicroStrategy's options chain, which is so liquid, to hedge all of their crypto. So MicroStrategy is essentially absorbing all the hedging pressure that the crypto industry is trying to do to protect their Bitcoin longs. So the reason MicroStrategy is a leading indicator, it's actually the only convenient way to hedge someone's long is to short MicroStrategy or buy puts. That's what we're seeing today.
We are watching MicroStrategy or strategy, we're watching Bitcoin, and we're watching possibly 77,000, which you think might be kind of a washout period, correct?
Yeah, that's right. Tom DeMark, who is an advisor to BitMine,
very well known
really
to me,
giving us a lot of insights. Yeah, he's watching that. Actually, MicroStrategy at this level here probably is when you want to ratchet into the longs, and Bitcoin maybe just a few $1,000s lower.
So we might be at a bottom for strategy.
Yeah.
Tom Lee basically confirmed what we already knew. MicroStrategy is being used as a hedging vector. Wall Street is using it as a pressure valve, and it is the only Bitcoin treasury company large enough to absorb all the liquidity behavior. You think JPMorgan doesn't know this?
Bitcoin's been around for 15 years. It's had 15 major drawdowns. It's always come back to a new all-time high. If you zoom out, this is just par for the course. This is normal in the life cycle of an emergent transformational asset class, and it's a healthy thing. It clears out the tourists, the leverage, and the weak holders, and sets the basis for the next rally upward.
A lot of folks are saying when Wall Street was kicking the tires that when Wall Street got involved, we'd have less volatility. And is that, do you feel it's the Wall Street connection, has that helped or hurt?
I think we are getting less volatility. When I got into this space in 2020, Bitcoin was an 80 vol asset, growing about 80% a year. And it's ground down to 70, 70, 60, 60, and now it's 50 vol asset, growing about 50% a year. I think every few years you're going to get another 5 points of vol taken off it as it matures, and it's kind of grinding toward being about 1.5 times as volatile as the S&P index and 1.5 times better performing.
Could it be, to a degree, a victim of its own success in the sense that it feels like other cryptos this year and other, other stories in this area have gotten a lot of attention? Also, of course, gold. Does gold take away some potential Bitcoin buyers?
Well, there's a lot of exciting things going on in the economy. There's digital intelligence and AI. There's digital assets, digital currency, digital finance, and you can't dismiss any of them. But Bitcoin still remains the ultimate digital opportunity for a sound money enthusiast. So if you simply want to save your money forever and avoid counterparty risk, Bitcoin is stronger than ever. These other opportunities are going to continue to be shiny things, and you can leave them to the tech investors that are experts in those areas. So
let's talk about your company for a moment. Strategy, the shares, we're going to put it on the screen here, getting hammered pretty good. And many talk about the financing your financing approach. Explain to the audience once again the approach that you use to raise money so that you can buy Bitcoin, and why and why maybe it's some are saying that that's going to collapse.
The company's up about 70% a year for the past 5 years. Bitcoin's up about 50% a year for the past 5 years. So it's actually one of the top performing companies, maybe it plus NVIDIA, in the entire S&P index. We're also the best capitalized company in the crypto economy. We've got more than $50 billion of equity, and we're a financial powerhouse. We have billions of dollars of liquidity in the equity every day. And our credit instruments are 100 times more liquid than the average preferred equity. So our approach is to raise capital by selling digital credit or by selling equity to invest in Bitcoin, which is digital capital. Bitcoin's appreciating about 50% a year for the past 5 years. We expect it'll appreciate about 30% a year for the next 20 years. And we offer these credit instruments that pay about 10% dividend yield in the form of a return on capital dividend, so it's tax deferred, and so it's a pretty strong business model. If you want to work out the math, as long as Bitcoin goes up 1.25% a year, the company can pay the dividend forever and create more shareholder value. If Bitcoin stops going up 0% forever, we got about 80 years to figure out what we're going to do about that.
What if Bitcoin goes down more, though? Is there a point on the downside that triggers some sort of domino effect?
The company's engineered to take an 80 to 90% drawdown and keep on ticking. So I think we're pretty indestructible. Our leverage is, in the level of 10 to 15% going towards zero right now, which is extremely, extremely robust.
Saylor and Strategy would need a 90% drawdown for collateral risk. They're sitting on a software business, 5 new structured Bitcoin credit instruments, whether you like them or not, $7.7 billion in offerings this year, and a balance sheet bigger than most countries. This ain't some meme stock, though it looks like it may be about to have its GameStop moment. But this is not Luna, this is not Celsius. This is the first digital monetary institution in human history. All right, now the turns table, we have a Senate bombshell. They now have official documents showing JPMorgan enabled Epstein. JPMorgan ignored internal warnings. JPMorgan coached him on avoiding reporting rules. JPMorgan moved over $1 billion for him. JPMorgan executives reported directly to Jamie Dimon. And Epstein was one of the most connected clients they'd ever had. The bank even did a $19 million transfer to Ghislaine Maxwell.
Well, for many years, JPMorgan was basically the primary bank serving Epstein. And in the course of the 15 years that it worked with him, it did a number of things. And first and foremost, it set up accounts for not only him and his companies, but also quite a few of his victims who had been trafficked into the United States. And it arranged for Epstein to be able to pay those victims, both in the U.S. and in Eastern European countries and in Russia. The bank lent him money that was associated for projects associated with sex trafficking. It, in some cases, just paid him cash, millions of dollars of it over the years to thank him for some of the services he had provided the bank. And over again, when people within the bank raised red flags about how much cash Epstein was withdrawing and some of the suspicious wire transfers he was doing, people higher up at the bank essentially looked the other way because they wanted to keep this guy as a lucrative client. And so, basically, Epstein's sex trafficking operation, we now know, operated in large part because he had unfettered access to the global financial system. And for many years, it was JPMorgan that was providing him with that access.
Take us through the timeline. And David Enrich, what about other banks? Did Jeffrey Epstein try to bank with other banks? I mean, this perhaps the most prestigious, the largest bank in the United States. But wasn't he turned away by bank after bank?
Well, there's some question about who turned him away and when. And certainly we know that in 2013, after JPMorgan, after years of internal pressure, finally parted ways with him, he went right on to another bank, the German lender Deutsche Bank, which is, you may recall, was the bank that was willing to do business with Donald Trump, among others. But the history with JPMorgan and Jeffrey Epstein starts in the late 1990s, and Epstein at the time was a very wealthy but kind of mysterious guy. The bank itself, in documents that we've reviewed, didn't have a whole lot of information on where his money was coming from, who he was working for, or why he was important. All they knew is that he was parking a ton of money at the bank and generating millions of dollars a year in fees. And over the ensuing years, Epstein's role inside the bank became more and more important, and it involved not just doing business that made money for the bank, but he introduced the bank to a lot of potential clients, to government leaders like Benjamin Netanyahu, and advised them on strategic initiatives and provide them kind of with troubleshooting advice along the way. So he was a really indispensable part of the bank and an indispensable partner, I think, to some of the bank's very highest ranking executives.
And this is the institution calling Bitcoin dangerous. This is the institution calling Saylor risky. This is the institution telling you about financial stability. I don't know, Jamie, you might want to sit this one out. Trump literally names JPMorgan in a post ordering the release of the Epstein files. This is not subtle. This is a monetary battlefield declaration.
In Bitcoin specifically, you had the JPMorgan CEO and chairman, Jamie Dimon, calling it essentially pet rock, and once again, calling into question its worth and its value here. I would love to get your reaction, especially as some of the financial industry elites and figureheads are continuing to cast some doubt here.
Yeah, thanks for having me, Brad. What do I think about Jeffrey Epstein's banker being concerned that a distributed, decentralized, open public money could potentially be used for bad things, sitting on a ski resort in Davos? I don't really care. I don't know why anyone cares, right? I mean, that guy knows when money's used for bad things. So it's a weird opinion of his. And my pet rock was up, as you said, 160% last year. It performed well against the dollar. So I don't know. I don't really care what that guy has to say about Bitcoin. I don't know why anybody does.
Jack Mallers says the bank threw him out and refused to say why. Well, I think we may have an inkling of an idea why, but damn it, he framed it. Absolute legend. A movement is building, the resistance is rising, and Bitcoin isn't only rat poison, it also works well on parasites. We're about to bring it home, but before we do, look at our likes.
3 or 4 times, maybe.
I gotta pump those numbers up. Those are rookie numbers in this racket.
Let's take a quick second for our sponsors who keep this show on the air over at the Bitcoin Way. If your wealth lives in their system, it's not yours, it's theirs. That's why we scream Bitcoin. That's why you self-custody. And that's why you call our friends over at the Bitcoin Way. They'll walk you through multi-sig, self-custody, privacy, how to run a node, and the tools that keep you sovereign when the fiat system pulls the plug. Don't wait till it's too late. Book a free 30-minute consult today using that link in the show notes. Need cash but don't want to sell your Bitcoin? Ledn is the global leader in Bitcoin-backed loans, issuing over $9 billion in loans since 2018, and they were the first to offer proof of reserves. With Ledn, you get custody loans, no credit checks, no monthly payments, and more. Visit learn.ledn.io/simply to learn more and get 25 basis points off your first loan. Max called Jamie Dimon a tapeworm, and honestly, I think he was being polite. Welcome to Operation Chokepoint 3.0. MSCI isn't reviewing classifications. They're building a filter to keep Bitcoin companies out of legacy capital rails. This is a targeted and asymmetric attack. This isn't left versus right. This isn't Republican versus Democrat. This is old money versus new money. Fed versus Treasury. JPMorgan versus Michael Saylor. Legacy versus Bitcoin. A decaying cartel versus a mathematical revolution. And whether they like it or not, Bitcoin is the final audit. Uh-oh, and we're hearing unconfirmed but circulating rumors. From the High Priest Max Kaiser, JPMorgan may be heavily short. MicroStrategy, a 50% pump could cause existential risk. We like hearing that. Bitcoiners are pulling funds from Chase. MicroStrategy share transfers are freezing. FTDs are spiking. And retail smells blood. This isn't financial advice. We're a news show, comedic, informative. But this is exactly how GameStop felt, sounded, started. It's like time's a circle.
I just want to ask you about the JPMorgan report that came out this morning warning that strategy could be excluded from benchmarks like NASDAQ, MSCI, and it could trigger an estimated $2.8 billion in automatic outflows. That's just from the MSCI alone. What's your response to that?
I think it's a bit alarmist. I'm not so sure the numbers are nearly that high. I think actually the numbers would be much smaller. I also think it's already priced into the market by a factor of 10, if you count it. I don't think there's any relationship between the decision-making of MSCI and the NASDAQ 100 or the S&P 500 index allocators. The company is an operating company. It's just like insurance companies use capital in order to create financial products, and banks use capital to create financial products. We use capital to create digital credit finance products. It's possible there are people in the world that don't fully appreciate digital credit or digital treasuries. That wouldn't surprise me. We had that challenge with bankers that didn't want to bank Bitcoin. We had that challenge with accountants that were a little bit skeptical of digital assets accounting. The accountants embraced the asset, the bankers embraced the asset, the politicians embraced the asset. We had the challenge with credit rating agencies, and they just embraced the asset. We're starting to get credit ratings. We have the challenge under the Basel Accords, where Basel Accords allocate zero value to Bitcoin, and now they've announced they're going to reconsider that. So I'm not concerned that we have these kind of concerns.
He's lived through 5 Bitcoin crashes and he's still buying. The legend never stops. Sell your chairs. So here's what we've learned today. JPMorgan triggered the panic. MSCI coordinated the hit. The media ran with expired news. Epstein ties have exposed moral bankruptcy. The Treasury is moving toward Bitcoin. Saylor is innovating at warp speed. Bitcoin adoption is accelerating. We're in the midst of a monetary civil war. The old system is dying and the new system is already here. It's just getting bigger. It's like an invasive species. And you are early and just in time for the fireworks.
No, listen, Scott, I don't know if I can continue with this. You know, this is.
Hey, you want to fight with me?
No,
I'm happy to fight with you if you want to go in the ring.
Hey, come over here and say that.
I've been in the ring.
Come over here and say that.
What do you mean come over there?
Come over here and say that.
You come over here.
No, you come over. Come on. You make the first move, buddy.
No,
make
you
the
make
first
the first move.
Come on, get up. Make the first move. It's my show. Make the first move. Yeah, get up off your butt.
You think I
yeah, go ahead, stand up. Stand up. Come on. Stand up.
Yeah,
what the heck?
Come back.
Don't you understand what Jamie Dimon has done to people? Don't you understand the risk? Don't you understand the risk? Jesus Christ. Get out of my show. Get out of my show. Get off the set.
Do you know what you can...
Get off the set.
Keep the show.
Get out of here.
Stick the show right where it was. The sun don't
What's going on here? Come on.
As for this crap... Get the hell with it.
Get out. Somebody call security. Get this lunatic off my show. I will never get this Jamie Dimon on my show ever more. Get this lunatic out of here.
They're fighting us because we are winning. Let us know what you think below, and I hope you guys enjoyed this one. Don't forget to like, subscribe, and give us a pam. Share this Sound Money Gospel and tell someone to have fun staying poor today. Man, wartime feels good. I miss this. And I love you guys. Catch you next time. Peace.
If you prefer to go down with the ship, you.